The central banks are here to save us, and long live the central banks. Okay, let's just for a minute try to forget that the monopoly money printing institution is behind the reason that your money is already worth less and less. So today on Renegade News, we're going to talk about their latest invention, CBDCs, which are also known as Central Bank Digital Currencies, and why this is the new buzzword on Google right now. Because it's important to know about these and understand these because they could affect the crypto market and probably will. And your understanding of them is going to be important if you're going to continue to invest in cryptocurrencies. Welcome back to Renegade News. I'm your host, Glenn Kowalski. Every week on this channel, we'll discuss the latest news, strategies, and tactics for breaking free from the system, paying less tax, and living anywhere in the world that you want. So let's just dive into it and talk about CBDCs and what they are. A central bank digital currency, a CBDC, is a digital version of a government-backed fiat money. And this type of digital currency is issued by the central bank and it's tied to the country's national currency directly. CBDCs are kind of similar to stablecoins, which are cryptocurrencies that are pegged to fiat money in an attempt to maintain the same value. But the main difference is that the world governments are the ones issuing the CBDCs. Right now, more than 80 countries in the world are actively researching or developing CBDCs, and there are various stages in the process. Some have already been canceled, some are inactive, but others have already launched their versions of these digital currencies. So before we dig into it too deep, let's talk about some of the pros and the cons of this type of money. And we'll talk about the pros first, even though, as you'll learn in a hurry, I'm really not for these, but there are a few pros behind it. And these pros are what the government's going to use in order to sell these central coins to the public. So it's important that you understand what they are because they're not really lying when they sell these pros. So the first one is that there's more efficient and secure payment systems and payments with these CBDCs. They're completely secure. And when the payments are made, they're very safe and secure transactions. They also allow consumers to use the central bank directly. You're not operating through a local commercial bank account at this point. When you're using these CBDCs, you're dealing directly with the central bank itself. And by doing that, you're eliminating the risk of a commercial bank collapse. Your commercial bank can't collapse, like your private local bank can't collapse and take your funds with it because you're actually being backed by the central bank itself. These transactions are also easy to track. And while this is going to be a big con, as we're going to talk about later, it can also be sold as a pro because by tracking these, they know where the money's going, where the money's being used. It makes it very difficult for terrorists and other bad actors to use these coins. And that's going to be a big selling point of why people will want to move into these central digital currencies. Now, on the other hand, there are several potential drawbacks to CBDCs, and these are a lot easier to talk about, even though there's a whole lot more written about the CBDCs and the pros, and very little talk about the risks on the society that these CBDCs would create. Now, I see these risks falling into really three different categories. First, there's the economic, then there's the financial, and then there's into human rights. First of all, there's some big economic risk behind these coins. And the key economic risk to these central bank digital currencies is inflation. These CBDCs can be created at the print of a button and distributed widely, and that inflates the money supply without any corresponding increase in the gross domestic product and the GDP. Now, they say that this risk mitigated by issuing CBDCs to individuals and businesses only in returns for actual bank deposits or in some form of collateral paid for with bank deposits, and paid directly to the government only in return for the bonds that have a reasonable chance of being repaid through taxes. However, alas, since the governments control the central banks, this risk is never really truly mitigated. And as we saw with quantitative easing and today's rampant inflation, the governments can always find ways to create more money and to spend more money. With CBDCs, the temptation to do so is only going to increase as it gets easier. The second economic risk is a large-scale misallocation of this capital in an effort to implement the CBDCs themselves. CBDCs require a nationwide infrastructure for distribution and the payments, and this needs to be in place for the CBDCs to actually be useful. Now, the private sector is the best one positioned to actually provide that infrastructure, but there's a risk to the CBDC infrastructure because it's being designed by bureaucrats, and separate from the private sector initiatives, and that can result in a low adoption of the CBDCs, which would be caused by a poor utility if they're not able to be used, and that would create a poor user experience. Next, we have financial risks. And the financial risks include the exchange rate risk, higher lending costs, and operational risks. A CBDC should just be another form of central bank money, but it's possible that governments could be tempted to exchange it for current forms of money in the national currency at less than a one-to-one rate. These CBDCs could result in a higher lending cost as well. In a recent discussion in a paper called New Forms of Digital Money, the Bank of England identified increased lending costs as a risk resulting from the decrease in in-bank lending with CBDCs and an increase in more expensive market-based financing. Then there's also the risk of a centralized CBDC system suffering outages and cyber attacks. Even a short-term outage could badly affect the whole nation by disrupting everyone's financial transactions. And finally, and probably the one that I care about the most, is the human right risks. If CBDCs have been designed inappropriately, they have the potential to be used as tools of surveillance and control by the governments, and they likely will. Every transaction is recordable, and any authority with access to the ledger could see all of the transactions that are being made. They could also control the individual through that ledger, such as by putting an expiry date on the CBDC or limiting how much a person can hold. They could vary interest rates depending on who they are, and they could prevent purchases and automatically deduct fines from your account because they have complete access to your bank account and your history. The combination of a digital ID and a CBDC also poses a humongous risk because access and addressability are needed for digital payments, but these are different than a digital identity. In a world of programmable money, digital identity can go way beyond just enabling access to your funds. Use of those funds could also be made conditions on your attributes of your digital ID. So once the two are tied together, what you do in your day-to-day life could affect what you're able to spend or do. Say something bad against the government, they could limit your funds. Jaywalk, they could pull out the fine for that jaywalking automatically and say, well, you also can't buy junk food today because you're being punished. So if your funds are in the CBDC, then the central bank and therefore the government can directly control how you spend and receive your money. You want to be really wary of anybody who's advocating for digital identity that's connected to these central bank digital coins, because, well, a digital identity is really necessary today to find fraudsters and money launderers and other criminals. There is no monetary reason to combine central bank digital coins with a digital identity. So you see many authorities who are looking to combine the two when really that doesn't need to be done. Even if you talk about the needs for these digital identities in order to stop terrorism, to stop bad actors, even if you follow that line of thinking and agree that it's necessary, you don't have to join the two in order to be safe and secure. So when we talk about these digital coins and we also talk about digital currency, a lot of people get the two confused and think the same thing. I've talked to Bitcoin about a lot of people, and they think of it like a digital coin, but they're not the same thing. Central bank digital coins are not cryptocurrencies. And although the idea of these central bank digital coins came from the cryptocurrency market, and that's what kind of sparked the discussions, they're really two very different types of digital currencies. The key difference between the two is in the concept of centralization. A cryptocurrency is a decentralized digital currency, and that means that there's no central party that's controlling it. The transactions are processed and they're recorded on a blockchain, which is a public distributed ledger. And now, as the name implies, a central bank digital currency is controlled by a central bank. So there's one central authority controlling those funds. Cryptocurrencies also provide a much greater privacy than these central bank digital coins. The transactions are sent and received through wallet addresses. And even in the less private central coins, it's still possible to retain some degree of anonymity. Certain types of cryptocurrencies are even thought to be completely untraceable. We start talking about privacy coins like Monero and Private Chain. They're completely decentralized and completely private, where nobody knows what your transactions are. However, with a central bank digital coin, the central banks will have a record of the users and the transactions. They're going to know everything that you bought, from a chocolate bar or a bag of gum up to bigger purchases like real estate and everything in between. They're going to know exactly what those are, and they're going to have full control over them. So if they ever want to stop one, it's as easy as flicking a switch. Now, where are we in the development of central bank digital currencies? Well, most of these are still in the research stage, but there are a few that have actually launched already. Here are some of the examples of the central bank digital coins that are either available already or are actually being tested right now. The Bahamas has launched their own sand dollar, which is a digital version of the Bahamian dollar. It's issued by the Central Bank of the Bahamas through authorized financial institution. China, unsurprisingly, is also testing a digital yuan, also known as the digital renminbi or digital RMB. Among the countries with the largest economies, China has gotten the furthest in development of the CBDC. Again, not that surprising. Nigeria is also rolling out the e-Naira, which records transactions on a centralized blockchain ledger. It's the first African nation to launch a CBDC. The US is also researching the costs and benefits of launching a CBDC, but of the nations with the largest banks, it's probably the furthest behind, according to the Atlantic Council. CBDCs pose a combination of risks to consumers. There's financial, economic, and human rights that are potentially extremely severe if a CBDC is designed badly or with bad intent. As you know, we think most of the things that the government does are with bad intent. And even if in general you don't believe that or agree with that, you have to agree that some parties in power do have bad intent, and they're going to have control over how these CBDCs are designed and used. So if you don't become a renegade and start taking responsibility for your own life and freedom, you're going to become a victim of what these people have planned. So subscribe right now to Renegade News for the latest news on infringements and wins in your search for more freedom and liberty in this unfree world. And learn to break free from this system and pay less tax and live anywhere in the world that you want. And while you're here, check out the video that you see on the screen right now for more information on how cryptocurrency can save us from the bureaucrats, bankers, bosses, and borders that are infringing on your life every single day. I'm Glenn Kowalski from Renegade News, and I'll see you over there.